All right. I hope everyone is having a nice weekend. I'm having a fantastic weekend. As always, a lot of good stuff going down related to, just making myself better as always. The body, the mind, getting in a lot of good workouts, a lot of good sauna sessions, a lot of good food, a lot of protein. Uh, got to fuel the body to fuel the mind and yeah, we can get into some charts too, because obviously we enjoy doing that here. As you all know, I'm going to keep the agenda fairly straightforward. For Bitcoin, we're gonna keep focused on the chart that I've had up for the better part of the last 3 or 4 weeks. I've been talking about I haven't been predicting a move into the 30 week, okay? This is not what I've been predicting. Uh, I talked about that being a possibility and this entire technical picture remaining unchanged. Okay? So that's what happened. We got to check back into the 30 week and the entire technical picture, the technical score that I assigned to this asset is still the highest technical score that you can achieve according to I'm the teacher and I'm the grader, so that's kind of cheating, right? But I went through for the members and the subs an exercise where I ranked the Bitcoin miners from a technical perspective, and I think I presented um, part of those concepts to everybody. Long story short, this picture hasn't changed. And so we're left here with the same technical picture we had before with for those that are leveraging, and I don't recommend any kind of leverage, not where we are now. I'd recommend leverage back when I did it, and I still wouldn't recommend it. And that's October 12th, 2022, when I posted it on my Twitter profile publicly that I was maximum levered long to the markets per what I allow myself to lever. The maximum amount of my leverage. That time is long gone, folks. If you're going to mess with leverage, you may get lucky, but if you keep doing it, you're going to lose. That's just the way it works. It's like saying you're going to go sit in a casino, and the longer you're there, the higher your likelihood of winning is. It's the opposite. It's actually time is the enemy of probabilities when the deck is stacked in the favor of the house. I digress. So point here being, with the amount of leverage that was taken out, with the amount of sentiment shift and the fear and greed on everything going all the way down, getting reset to the bottom, uh, I still contend everyone's counts and approach is wrong. Even the bulls. I've been saying this for a while, where my coming out of these summer lows, and I posted this I think last week. My approach here was given what we saw with sentiment in this massive 7, 8 month consolidation correction back into 48, that we were just setting up for this massive extended fifth. Okay. And once again, I had this drawing in essence. The timing is going to be most certainly wrong because no one's going to be able to time the markets, or no one truthful is going to be able to time the markets. Let's put it that way. If they're telling you they can time them, they're full of it. But anyway, the thought process was like to mid 90s and check back to 76, and that's kind of how I had this thing drawn out. Now, obviously, it didn't take that shape. It took the different path, but in that sort of shape. Let's put it that way. Point being that we were setting up for what I believe is making this bottom two. And I've been saying in the members videos that I've been doing daily or every couple days that what I'm expecting in terms of a coming out of this correction is a derivative of what happens as we interact with this 30 week. And if we get a decisive reclaim, which we are right now, we're at 87.8, and we've got 8 hours to go. A decisive reclaim after a challenge of the 30 week has only happened once. Okay. And in that situation, it was in a minor wave, and that led to a V-shaped recovery. And that's back in February or March of 2023. The other two times we've challenged it, we breached it. Okay, and that led to months of consolidation under it. Second time, we didn't challenge it on this first Dragonfly. We didn't hit it. It's the challenge of it breached it, and that led to multiple months, 3-4 months of consolidation in and around it prior to resumption. Here we are with a different character of the challenging of this 30-week, around the 30-week, than we've seen in the last two. And the market is now conditioned, in my opinion, to expect a long, drawn-out consolidation. Well done, market. And again, that could happen. I don't know. And again, I could be completely wrong with everything I'm talking about here. That's always an option. Just because I've got a lot of followers and I've been directionally right for the past few years doesn't mean that's going to continue on forever. When I think about, I was on a space on Friday, a Twitter's X space, and the host was asking me, what are you, all in cash? I'm like, what the hell does that mean? I mean, and I'm saying that sarcastically, but there is no way I, for the life of me, would ever attempt to trade in and out with core positions, on any Elliott wave or any trend analysis. That stuff all this only thing this does for me is to say when am I gonna look to add to the long-term accumulation investment portfolio? When am I going to add to it? When am I going to, and there's a swing percentage too. There's a swing portfolio, and that's where I look for things like MSTR to raise cash, to say, okay, with MicroStrategy, before anyone was talking about it, I was saying a 15, 20x move max, and it did a 30 plus, right? That's profit taking, and that's to raise cash for opportunities that may or may not come. And I get a lot of requests and things, and this is just a sidebar. The YouTube members and the Twitter subscriptions essentially are for these requests. I don't have enough time to respond to the requests that I get. I get a lot of requests for more content, and so that's what I've done with both of these platforms. I also, with a small percentage of the portfolio, will look for swing opportunities, and one of them being this WGMI Bitcoin miner opportunity, if we got down to here, was going to compound for a swing to look at that type of move and participate in the swing portfolio. And so we took advantage of that. Last week. We'll see how that works out. But long story short, folks, if you're looking for, someone that, if you're an active day trader, and you're wanting to join these things because you think it will help you, don't do it, because most traders are going to end up losing. What I'm doing with these two platforms is just providing additional content, additional education in terms of how I read charts from multiple standpoints, giving you my opinions on charts that you request, both bullish and bearish if I see both, and also giving you my approach to when I do take trades. And I'm not a financial advisor, so don't take the trades I'm taking, but how I approach it. There may be 3 or 4 in a year that I take, big ones. So it's not active, it's not day, it's not week, it's not every other week, right? True asymmetric setups for me come at multiple points of confluence when the least expected outcome, even in my mind, occurs. Then I have a plan for it. So I've been talking about what if that were to happen? There's a plan for it. Do I see it happening? No. Do I want it to happen? No. But do I have a plan for it? Yes. And that's how I approach that. So just wanted to provide some more context in terms of both of those services. I do not think you need both. If you're a YouTube member and a Twitter subscriber, told the subscribers that if there's any videos from the members because that's what I do with the members request that you want to see, I'll post that to the Twitter subscription group as well. The subscription group on Twitter basically is everything I do for the members on YouTube, plus 10, 20, 30 more charts a week and chart requests, that kind of thing. So anyway, that's where we are here. This weekend in the members and subs group, I went into multiple examples of high time frame fifth wave extensions. This was a really fun exercise for me. This was a really fun exercise because, again, we're hearing and seeing a lot of calls for this being a potential top and bearish indicators. Well, folks, if bearish indicators worked on a high time frame, they would every hedge fund would outperform because they would spend money and not only use these bearish indicators, but then create indicators we're not even aware of that can look at data from the past and then assign a symmetry, asymmetry probabilities for the future. And instead of 5% of the hedge funds outperforming the S&P, it would be 50, 60, 75. But that's not the case. That's not the case. So we looked at we looked at gold, for example. This setup looking eerily similar, 1, 2, 3, 4, and then an extended fifth, and how many bearish things we saw in the indicators, including bearish engulfings, including bearish divergences, including MACD. I mean, there were so many examples there that were not useful whatsoever that we explored in gold, in oil, in the S&P, in late 99, 2000, multiple examples of all these bearish things people are looking at that showed up in those trends, in those high time frame uptrends that were invalidated. And so I hope that that exercise was a lot of fun, and I hope for those that for the members and subs enjoyed that. If you haven't, I encourage you to watch it. So we're finally left with a long rambling there, but I get a lot of questions about all those things that I just mentioned, and so I felt this is a good platform to kind of address all of that. And so long story short here, we're left with, again, the same setup I've been showing here, this massive, massive reaccumulation that's been going on for the better part of 5 years, whatever you want to call it, cup, handle, breakout, check back, continuation is the base case. Base case here. Nothing less, nothing less. Cloud is still green and pointed in the up direction. 30-week is still pointed in the up direction. We're above the 30-week. We've made a 3-wave move coming out of an impulsive move. This is all confluence into the same direction. And that's the way I'm currently seeing it. Let's keep going. WGMI, this is an example of an exercise I did a couple of weeks ago for the subs where I technically ranked everything. And WGMI has hit the bottom zone of what I was looking for to compound. Again, when I say very rarely am I taking material swing positions, it's in points where I think the market has assigned it the least probability, and that was kind of this one ABC. Right now it's a running flat. It could be a double bottom. It could be an expanded flat. I don't care. It hit the 1757 zone. That was a zone I was looking to compound after initiating that position in this region in the B wave. C was completed, and so now my expectation is however long this takes, whether this is a V or not, or it consolidates, I don't care. 51 to 69 is where I'm looking for this to go sometime within the next quarter to 6 months to even a year. I'm a patient man. I can wait. And so WGMI, the miners, I know they look like shit, whatever. Not to me. Not to me. This looks just like a massive accumulation towards the end of an accumulation. Nothing's changed. SPY. Again, SPY for right now, Friday's close, we reclaim the cloud on a daily. I've been talking about the secondary path as an option, as an A, B, C, down to right where it hit on Friday, and talking about expecting a big reaction in the subs on Friday and needing to reclaim the cloud for this count to remain primary. We reclaim the cloud in 1 day. That's good. I want to see it typically when it gets breached within 2 or 3 trading sessions. It was. That doesn't mean this is going to happen. We most certainly, this high time frame demand that goes all the way back to August, if these lows are breached, 575 in some fashion, could put that in play. And then this higher degree count is not valid. This would have been the 5 here, 3, 4, 5, and then massive A, B, C. But for now, that's speculation. What's in front of me is the secondary route that I've been looking at for the better part of 2 months. IWM, same concept. We are from a technical perspective, this massive reaccumulation have been since July. What have we been doing? Price has been doing what? Sideways since July. Okay. What do we see up here? We see SOS and it's sideways, sign of strength, consolidation. That's all this is. And it's above this entire reaccumulation pattern. And so the direction, the direction for me hasn't changed. It's going to be expansion once this is resolved. That's my opinion. Nothing's changed with IWM. The dollar continues to do what we've been forecasting it to do since early or mid to late December. And that is ending diagonal I was talking about, breaking out of it did, rejection under the 30-day, into the cloud, starts continuation of a potential downtrend. We're now checking back to the 30-day. For this to be invalid, you want to see this to come back into the cloud and then do something like that. Okay. For now, this is just a check back to the cloud, which has turned red and is coiling down along with the moving averages coming out of a high time frame ending diagonal. That to me is a bearish setup. And so I'm looking for continuation to the downside. Could take many shapes. We'll see. Target for the dollar here is 101, 102 sometime in the next couple of months. Yields continue to do what we've been expecting them to do. And that is coming out of the very similar type of distribution, calling this kind of an upthrust, and then a test back into it. And you got a couple tests, and now we're breaking the cloud. The 30's coming down. This could check back, of course. We could go from 4 to 4.4, 0.5, and this still could be the beginning of a downtrend. I'm looking for yields to continue to move down to the tune of 3.8 to 3.7 before any type of consolidation sign of weakness. Gold is our last one. And with gold, this could be the start of the consolidation I've been looking for a while. Maybe it's not. We've got some local bear divs on the daily, which only signal to me consolidation, not weakness, right? In the context of this major uptrend that gold's in, we could be working on something like this, and then we're heading all the way back. Could be shallower, it could be steeper. I don't know, but this also leads me to believe that Bitcoin's getting ready to rally, just like we saw at the beginning of November here, where gold initiated its consolidation. Okay. That's where Bitcoin thrived. We saw that. And we really didn't see that in February. They kind of went together. So not necessarily a one-to-one correlation there, but nothing bearish on gold in terms of high time frame, low time frame consolidation that I've been looking for. I think maybe starting here, we shall see. Folks, hope you have a great rest of your weekend. Take care. We will continue to do more of these throughout the week.